Hello and welcome to Morning Brief Market Sunrise. It's Friday, 22nd August. Coming up on the show, the markets are bracing themselves for Fed Chair Jerome Powell's last ever Jackson Hole speech. Meta and Google sign a $10 billion cloud services mega deal. And Nvidia's boss, Jensen Huang, says that the chip giant Taiwan Semiconductor Manufacturing Company is, quote, one of the greatest companies in the history of humanity. We'll tell you his reasons for that claim. So grab your coffee and let's own the morning. Well, we kick off the things you need to know by looking at where the US Futures Board stands. And US stock futures look set to pause this week's run of losses in uncertain trade ahead of Federal Reserve's Chair Jerome Powell's Jackson Hole address, with markets scaling back bets on imminent rate cuts. A sell-off in big tech has halted US stocks' record-breaking rally as investors wait Jerome Powell's latest policy blueprint and weigh whether the Fed will stay cautious on inflation or tilt towards supporting a softer labour market. This will be the Fed chair's final Jackson Hole speech, and the stakes couldn't be higher. Not only will what he say have a big impact on market sentiment, but remember, the Fed's independence is also being questioned. The Trump administration wants interest rate cuts, and there are growing divisions within the central bank's own rate-setting committee. Powell is also expected to lay out changes to the central bank's policy framework review, which articulates the Fed's strategy and commitment to fulfilling its congressional mandate for stable prices and maximum employment. In particular, the central bank is expected to drop so-called average inflation targeting, a policy put in place pre-pandemic when inflation was running low and Fed officials wanted to avoid deflation. This strategy has said that if inflation ran below 2% in years past, the Fed would tolerate it running above 2% in the future on the theory that it averages out. Given the recent bout of inflation and the risks it poses to the economy, the Fed is expected to drop that and focus on an inflation target of simply 2%. The next thing you need to know about is that NVIDIA has told some component suppliers to stop making its H20 AI chip designed specifically for the Chinese market. That's according to the information. According to the report, NVIDIA instructed Arizona-based Amkor Technology to stop production of the H20 chips this week and also notified South Korea's Samsung Electronics. Just last week, Chinese authorities summoned domestic companies, including Tencent and ByteDance, and expressed their concerns over the use of the H20 chip. And for the final thing to know about, we're sticking with tech. Google has struck a 6-year cloud computing deal with Meta Platforms worth more than $10 billion. This follows the search giant's recent agreement with OpenAI. According to the information, under the agreement, Meta will use Google Cloud servers, storage, networking, and other services. Meta and Google have long been rivals in online ads, but Meta needs all the cloud infrastructure it can access. Heading back to Jackson Hole now, which is clearly the main focus for markets today, and Powell's widely anticipated speech will be delivered as the debate over the state of the economy and the possibility of rate cuts heats up. In interviews with Yahoo Finance on Thursday, two Fed officials offered some caution on the need for interest rate cuts as soon as next month, given recent inflation data. Here's Cleveland Fed President Beth Hammock speaking to my colleague Jennifer Schoenberger.
I would say that what we saw in these most recent inflation reports, and again, we try not to make too much out of any one series of reports, we'll get a lot of data before the next meeting, is that you saw that wholesale prices were going up more significantly, but not necessarily being passed on to consumers. That tracks with what I'm hearing when I'm out traveling in the district. And I'm hearing from manufacturers that they're trying to buffer these price pressures as much as they can, but that's not going to last forever. And so some of these price pressures that are coming into the PPI and coming into the wholesale space will eventually make their way into the consumer space.
Building on what you're hearing from contacts in your district, in terms of the impact of tariffs on inflation, we now have some greater clarity on what tariff rates are going to be for certain countries, semiconductors. We have an eye into perhaps some of these exemptions. So how quickly do you think, you said it's not going to last forever, that the fact that companies are buffering consumers, how quickly could we see pass through, and how is that informing your outlook?
Yeah, so when I think about the tariffs and the impact that it can have, it's just now, I think, that we're starting to see some of those impacts play through into the economy. It usually takes 3 to 4 months to start seeing the early impacts of tariffs. And so we're just at that point right now, just past that 3 to 4 month mark. I do expect from the conversations I've had that we're not going to see the full impact of tariff pass-through until sometime next year. There are a lot of prices that only get reset once a year, some contract negotiations that happen around the turn of the year. So it could be that we're still continuing to see some of these impacts in Q1 and Q2. In terms of whether tariffs are going to be a one-time price level impact or more persistently inflationary, certainly the economic theory would say it would be a one-time price level impact, but theory and practice can be quite different. And the way most models think about tariffs is kind of a one and done, a one-time, very clean, we're putting an X% tariff on something and that's it, it's stable. Of course, the way that tariffs have been implemented here, there was a lot of negotiation, a lot of back and forth, and it played out over a much longer time period. And so it may not be that the economic theory really holds in practice.
And so do you suspect we could see more persistent inflation as a result?
I'm certainly attuned to that. My biggest concern is that inflation has been too high for the past 4 years, and right now it's been trending in the wrong direction. And so I think it's really important that we stay modestly restrictive to make sure that we can bring inflation back under control. When I'm out in the district talking to people, I hear constantly about this two-speed economy. I hear about affluent families who are doing really well, really enjoying how the stock market is doing. That's adding to their outlook and how their confidence in the markets. But on lower income families, inflation has been really biting hard. It means that more of their paycheck is being used for food, for housing, and they really don't have money left over to buy new school supplies, to buy new clothing that their kids need as they head back to school.
Well, today's market movers are mainly impacted by the events at Jackson Hole, but also the war in Ukraine. We start with US Treasuries. Bond investors are heading into today's much anticipated Jerome Powell speech, largely expecting the Federal Reserve Chair will indicate policymakers will start cutting interest rates next month. There's a good reason why they feel this way. In recent years, he has used the occasion to make market-moving policy news, with investors zeroing in on whether the Fed chair pushes back or not on the current pricing for rate cuts. Now, interest rate swaps have retreated in recent days amid hawkish comments from other Fed officials and mixed economic data. But the market still shows about a 70% chance of a quarter-point cut at the September meeting and close to 50 basis points of easing for 2025. Now, a hawkish tone during the speech will likely weigh on shorter-dated government bond yields. It may also add pressure to a recent series of large trades in the options markets, which have targeted an outsized rate cut next month and a total of 75 basis points of reductions by the end of the year. Shorter dated yields have already moved around 11 to 16 basis points lower across 2 and 5 year notes in recent weeks, holding on to some of the rally that was triggered by weak July employment data. Meanwhile, benchmark 10-year yields are holding steady at around 4.33% today. Okay, let's move on to the world of crypto, as that too is feeling the Jackson Hole impact. The price of Bitcoin is holding steady at around 113,000 mark ahead of that speech. The world's largest cryptocurrency by market capitalization rose about 1% on Thursday, rebounding from a 2-day slump earlier in the week. Still, Bitcoin remains well below its recent record high of more than 124,000 it reached just over a week ago. For Bitcoin, a hawkish message emphasizing inflation risks could pressure risk assets, potentially dragging the cryptocurrency back towards the 110,000 level. A more dovish tone, however, could revive hopes for an interest rate cut as soon as September, offering support for digital assets. And finally, we're going to look at oil. Prices are stable today, but hopes for an imminent peace deal between Russia and Ukraine have dimmed, putting prices on track for their first weekly gain in 3 weeks. The 3.5-year war continued this week as Russia launched an air attack near Ukraine's border with the European Union on Thursday, while Ukraine said it hit a Russian oil refinery and critical pumping station. Remember, President Trump is trying to broker a peace deal between Russian President Vladimir Putin and his Ukrainian counterpart, Volodymyr Zelensky. Oil prices were also supported by a larger than expected drawdown from US crude stockpiles in the past week, indicating strong demand. But again, the events at Jackson Hole could impact oil prices as well. Lower interest rates can stimulate economic growth and increase oil demand, potentially boosting oil prices. Okay, we're heading for a short break now, but coming up, how to play the AI trade with ETFs. Jared Blickery explains in the latest Stocks in Translation. That's next on Morning Brief, Market Sunrise. Welcome back. Well, AI is still one of the hottest trades on Wall Street, even as some of the top stocks pull back. Yahoo Finance's Jared Blickery explains how to avoid too much concentration in the top names in today's Stocks in Translation.
AI isn't just hot, the stadium gates, they've been flung wide open, but everyone is rushing to the same two merch booths, that would be NVIDIA and Microsoft. In today's Stocks in Translation, we're going to show how to play the AI game with ETFs and also how to avoid too much concentration in the usual names. First, a quick refresher on what an exchange-traded fund actually is. An ETF is a fund that holds a basket of stocks and sometimes other things like bonds or commodities, but trades like a single stock all day long. It's a simple idea and a fast way to own an index like the S&P 500 or a theme like AI. Now take a look at all these AI ETFs, 23 in all, with 4 added this year alone. The performance is year to date, and keep in mind some of these names haven't been around that long. Now, according to Todd Sohn, CMT at Strategas ETF Research, who I'm going to lean on heavily for this presentation, they have nearly $17 billion in assets, and most of them, 16, have come after ChatGPT has become mainstream. Now, take a look at this chart that shows the total AI ETF count as it has evolved since the very first one in 2016, which was the Global X Robotics and AI ETF. Since 2023, this line gets very steep, showing huge institutional buying interest. Now, this gets into the product for markets like investors, and if anything, it shows that we're still in the early innings when it comes to building out AI funds. Now, this chart here is what's called a scatter plot. Each dot is one of the 23 ETFs, and the higher it's positioned vertically, the more money it has, or assets under management. And from left to right, it's just the timing of when they were introduced, and that's the same data as we were looking at in the previous chart. Now you can see that the line shows where the ChatGPT era began, and it captures about 70% of the number of ETFs. What you're also going to notice is that older funds towards the left, they tend to be the biggest. They have the most assets. But there are a few exceptions, as we have some newcomers toward the right of the chart that are getting pretty big pretty quickly, like 2 iShares ETFs, along with the Dan Ives Wedbush AI Revolution ETF, ticker is IVES, and it's not every day that an analyst gets their own ETF. Now, take a look at the money flowing into these funds. This chart by Strategas goes all the way back to 2021, and it uses a 65-day rolling window to look at flows into this group of funds. All you really need to focus on is how the line representing flows is accelerating recently at the right side of the chart. But AI isn't just chips and software. This chart here tracks flows into utilities and infrastructure ETFs, the power, the pipes, and the data backbone. Flows aren't soaring quite as much as a prior chart, but they're definitely heating up and approaching the top end of their historical range. This is what we call the picks and shovels angle for AI. Now, we need to address the issue of concentration. The picks and shovels trade we were just looking at can be a good way to diversify, because if we now look at the original group of 23 AI funds, we see a lot of familiar names popping up in their holdings. That would be NVIDIA, Microsoft, Alphabet, Meta, Oracle, Amazon, even Palantir. On average, it's the 23 AI ETFs we've been looking at. Inside them, the NVIDIA weighting runs about 6% and Microsoft about 4%, so 10% total, and that's just an average. But some of these ETFs have no exposure to the big names, and weightings can vary drastically. So the bottom line is, when buying any ETF, always do your homework, please. And remember, if you already own passive funds that track the S&P 500 and NASDAQ 100, you already have a lot of exposure to the big AI companies. So search for the holdings in the ETFs that you're thinking of buying, and don't forget the picks and shovels angle. Tune in to the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast.
Great analysis there from Jared, as always. Well, we're heading for another break, but stay tuned for Trending Tickers, which is after the break. Welcome back, and now it's time for today's Trending Tickers. We're watching Standard Chartered, BJ's Wholesale, Tesla and NIO. First up, Standard Chartered. It's getting a boost after the US Department of Justice rejected claims by whistleblowers that it failed to adequately investigate allegations of sanctions violations by the British bank. The multinational lender had been accused by lawmakers of enabling illicit payments to known terrorists. Republican Congresswoman Elise Stefanik claimed Standard Chartered made at least $9.6 billion from illicit payments while also helping China buy sanctioned Russian oil. But the new DOJ report reads that these claims are, quote, entirely unfounded. The bank and several of its peers have faced several terror financing cases from the US Armed Services members and their families. Shares in Standard Chartered jumped in the pre-market following the report. Next up, we have BJ's Wholesale, and it's just reported second quarter results. Now, the stock is up actually in the pre-market, but initially fell by around 8%. And adjusted earnings per share came in at $1.14 on revenue of $5.38 billion. Now, the earnings per share number was better than expected, but the revenue fell shy of the expectation of $5.48 billion. So a miss there. However, the company did say that it was going to boost its full year earnings per share outlook. And that's having initially had a very big impact on the share price in pre-market, falling around 8%, now in the green. Okay, finally, let's take a look at automakers, Tesla and NIO. Now, Tesla's raising the price of its fastest Cybertruck by $15,000. That's according to the company's website. The Cyber Beast now costs around $115,000, up from about $100,000. Tesla says it now has the Lux package, which includes supervised full self-driving and free access to its supercharging network. This comes amid disappointing Cybertruck sales, down more than 50% year over year in the second quarter. That's according to data from Kelley Blue Book. Meanwhile, NIO is unveiling one of its most affordable vehicles ever. The Chinese EV maker announced its ES8 SUV with a battery subscription plan. The program offers lower upfront costs and lets customers swap or upgrade batteries through a monthly fee. Deliveries are set to begin in late September. Okay, that does it for Trending Tickers. You can track the best and worst performing stocks with Yahoo Finance's Trending Tickers page. All right, it's a who's who of the most influential decision makers in policy and finance in Jackson Hole this week, and we're giving you a peek behind the curtain. Here's a behind the scenes look from our own Jennifer Schoenberger. Take a watch.
Fed officials are descending on Jackson Hole for the Kansas City Federal Reserve's annual economic symposium here at the Jackson Lake Lodge in Grand Teton National Park, a confab dating back to 1982. Central bankers from around the world, academics, policymakers, and journalists come together to discuss the economy and monetary policy. Tonight, there's a dinner to kick off the conference. Friday, Fed Chair Jay Powell will give an important policy speech. Typically, Fed chairs have used their Jackson Hole speech to communicate an important policy message. This year will be Powell's last speech as chair, and one where he's slated to speak about the economic outlook and changes to the Fed's monetary policy framework, a strategy for achieving their congressionally mandated goals. While investors are looking for clues on whether the Fed will cut interest rates next month, Powell could use this opportunity to give a broad speech and mark his legacy. During the day, Fed officials will hear from top economists who have penned papers around a topic the Kansas City Fed has picked. This year, the theme is labor markets in transition, demographics, productivity, and macroeconomic policy. Then those papers will be debated. But it's the conversations on the sidelines of the conference that may be the most interesting, both in terms of what you can learn on people's views on the economy, as well as just learning about the person specifically and hobbies that they enjoy. Amongst the glitterati expected here in Jackson Hole are European Central Bank President Christine Lagarde, of course, Fed Chair Jay Powell, all the regional Fed head presidents, as well as the Board of Governors members. And we also expect central bankers from around the world, especially from the Bank of England and the Bank of Japan. Why Jackson Hole? Well, the Kansas City Federal Reserve learned that the best way to ensure that then Fed Chair Paul Volcker would accept an invitation was to find a location somewhere in late August where there was fly fishing. So Jackson Hole it was, and Jackson Hole it still is some 40 years later.
Okay, our call of the day is next. And it's really not our call of the day, it's Jensen Huang's, the CEO of NVIDIA's call of the day, to be fair. He showered praise on Taiwan Semiconductor Manufacturing Company, or TSMC as we know it, on a visit to Taiwan, saying that anybody looking to take a stake in the company would be, quote, very smart. This comes at a time when the US administration has signalled interest in acquiring stakes in tech companies, especially those in receipt of funding under the US CHIPS Act. Huang, who said the main purpose of his trip was to thank TSMC for work related to NVIDIA's Rubin, its next-generation AI chip architecture, made the remarks in response to a query on Washington looking to take a stake in the Taiwanese chip foundry. He also said that he thought that, quote, TSMC is one of the greatest companies in the history of humanity. Now remember that the 2022 CHIPS Act, passed with bipartisan support under the Joe Biden administration, has seen grants and loans awarded to chip makers expanding production in the US as part of efforts by Washington to revitalize US leadership in semiconductor manufacturing. TSMC had been promised $6.6 billion under the Act to help build its 3 cutting-edge chip fabrication plants in Arizona. And earlier this week, US Commerce Secretary Howard Lutnick told Reuters he was looking at equity stakes in exchange for CHIPS Act funding for companies such as Micron, Samsung, and of course TSMC. Now, back in March, TSMC announced an expansion of its investment in the United States to $165 billion. Shares of TSMC that trade on the Nasdaq are up around 15% so far this year, but with this kind of ringing endorsement, it's difficult not to imagine further gains. Okay, before we go, let's have a quick look at the markets. We start in Asia, and it was a pretty choppy day in Asia overall. Stocks mainly clung to safe ranges today as investors wait on Powell's speech, of course. Defying the sleepy mood, China's blue chip CSI 300 index, it jumped for a third consecutive day of gains. Tech shares led the advance after DeepSeek released an upgrade to its flagship V3 AI model. Let's turn over to Europe now, and European stocks are reverse course to trade higher. Actually, they started off lower as investors digested the news of that EU-US trade deal from yesterday. Elsewhere in the region, it's worth noting that Germany's GDP showed that Europe's largest economy shrank by 0.3% over the second quarter. That was a sharper decline than earlier reading had suggested. And finally, let's have a quick look at where the US markets stand before we head into that Jackson Hole speech. Remember, Jerome Powell speaking at 10 a.m. Eastern, and markets are in the green there, perhaps reversing from the tech sell-off that we've seen this week. They're also, very much feeling very positive. Well, hopefully hopeful that Jerome Powell may signal interest rate cuts in September as well.